Good morning, students. Today we are going to learn the control process, which is the topic from the subject F&B Control and Management. First, we are going to learn the introduction of control process. The introduction is the control in the F&B industry really means controlling people action. These are the factors. Food does not appear by itself without help. Excess quantity of food and beverage into the plate and glass. Employees' wages calculation are not based on the wrong numbers of hours unless someone gives the wrong information. Food are not consumed by pest unless made available by human. Customers seldom leave without paying unless made possible. Now we are going to learn managing income and expenses. Food service management. It is important that the food service manager must be a talented individual. These criteria are true. The person must be able to grab opportunities and profit oriented, a unique salesperson, good personality with the guest, hard working person, and most important, the person is the controller or regulator of the operation to achieve maximized profits and minimize costs. Income. Income can be managed in many ways, thus to ensure profit. Increasing income can be done by increasing the number of guests and the amount of money they spend. This goal can be achieved by suggestive selling, creative menu pricing, and discount. Our main goal in this course is not to sell but controlling expenses. Expenses. These are four major expense categories that must be controlled by management. They are food cost, beverage cost, labor cost, and other expenses. The control process is definition of control. Control is a process used by managers to direct, regulate, and restrain the actions of people so that the established goals of an enterprise may be achieved. Second is cost control defined. Cost control defined as the process used by managers to regulate cost and guard against excessive costs. It is an ongoing process throughout the operation. Two principles of the principal causes of excessive cost are inefficiency and waste. Third is sales control. Sales control is important to ensure that all sales results in appropriate income to the business. Therefore, it is important to require that each employee record each sales accurately, checks, duplicates, bills, or etc. The fourth is responsibility for control. Responsibility is clearly falls onto the management, but the task on controlling differ due to the nature of the establishment. Small establishment, the control responsibility usually taken by the management, but for larger establishment, it is delegated to the assistant manager or controller. Fifth is instituting control. Food and beverage establishment usually involves process of raw material purchased, received, stored, and issued for the purpose of manufacturing products for sale and services. At each stage of operation, it is necessary to institute control in order to stop pilferage or problems. Each control must be suitable to each of the operation, depends on the nature of material and service requiring control, and on the degree of difficulty inherent in instituting the control. The control techniques are: first is establishing standard. Standards are defined as rules or measures established for making comparisons and judgments. Quality standards are used to define the degree of excellence of raw materials, finished products, and by extensions, work performed. Quantity standards are defined as measures of weight, count, or volume used to make comparisons and judgment. Standard cost is defined as the cost of goods or services identified, approved, and accepted by management in order to make judgment and comparisons of the effectiveness of the operation. Thus, standard cost must be calculated as accurately as possible. Second is establishing procedures. Procedures are the method employed to prepare products or perform jobs. Standard procedures are those that have been established as the correct methods, routines, and techniques for day to day operations. For example, production procedures must be standardized for several reasons. One of the most important of these is customer satisfaction. Any given item should be produced by the same method and with the same ingredients every time it is served. It should also be served in the same quantity each time, partly so that regular customers will be given the same quantity each time they order the item, and partly to maintain cost standards. Third is training. Training is a process by which managers teach employees how work is to be done given the standards and standards procedures established. For example, if management has established a standard for ounce portion size for hamburgers, then all employees responsible for producing portions of hamburgers must be made aware that 4 ounces is the correct portion size. Fourth is setting example. Employees in an operation follow the examples set by the manager. The manager's behavior, manner, responses to questions, and even a failure to speak or take action in some situations. The behavior of individuals in a group tends to be influenced by the actions, statements, and attitudes of their leaders. Work habits, attitudes, behavior, spirit of a manager are the evident. If the manager who has occasion to help employees plate food for the dining room serves in correct portion sizes, employees will be more likely to do the same when the manager is not there. Similarly, if a manager is in Similarly, if a manager is inclined to wrap parcels of food to take home for personal use, employee will be more likely to do so. The fifth is observing and correcting employee actions. One of a manager's important tasks is to observe the actions of all employees continually as they go about their daily jobs, judging those actions in the light of the standards and standard procedures established for their work. If any employees are falling if any employees are failing to follow these standards, it is a manager's responsibility to correct their performance to the extent necessary at the appropriate time. The sixth is requiring records and reports. Recording and reports is an important element in control as these information helps in decision making, judgment, and comparisons of the operations. One such report is the statement of income. For example, it is important to recognize that managers need timely information to determine whether primary goals and sub goals are being met. If timely records and reports are not available, opportunities for taking corrective action may be lost. The seventh is discipline employees. Discipline is defined as action taken to give a warning, punish, or telling off an employee for work performance or personal behavior incompatible with established standards. It is seldom practiced but only used as a deterrent or if corrective action failed. By selecting the right people for the various jobs, those with the experience, skill, and the personal characteristics, but and personal characteristics that match the job requirements, the number of individuals requiring some level of discipline can be reduced to a bare minimum. However, every manager must face the face that at times an individual staff member must be disciplined. The eighth is preparing and following budgets. Preparing and following budgets may be the most common technique for controlling business operations. Budget is defined as a financial plan and may be described as a realistic expression of management's goals and objectives expressed in financial terms. For example, cash flow budget, capital equipment budget, and advertising budget. Operation budget is the most important budget for F&B manager. It is a forecast of sales activity and an estimate of cost that will be incurred in the process of generating those sales. Preparing an operating budget. Preparing an operating budget. An operating budget is normally prepared using historical information from previous budget. Preparing an operating budget. An operating budget is normally prepared using historical information from previous budget and other financial records. The second step is to calculate the percentage and analysis of the previous records. Then making assumptions or judgment based on all the influencing factors that might affect the business operation during the forecasted period and computing into the new budget. Flexible budget, normally prepared for levels of business volume above and below the expected level. For example, you can see illustration on your screen. Here we are see that the profit and loss of the restaurant. In the first column we are going to see sales, and in the other cost of sales, and in the other is controllable expenses, and in others occupancy cost, interest expenses, and depreciation, and in the last we are going to see restaurant profit and loss. The control process consists of the following four steps: establish standard and standard procedures for operation, train all individuals to follow established standards and standard procedures, monitor performance and compare actual performance with established standards, take appropriate actions to correct deviations from standards.